Hi traders, welcome to my YouTube channel The Mighty Bull. Can you see this beautiful structure where the stock was given a tremendous move over here? What will you do if you see such a stock? You had missed the wonderful opportunity. What you will do, what you will feel? We will always feel that it would have been better if you had entered here, right? But what if I say there is a way that you can trade these structures? Usually I don't recommend trading this kind of monster moves because the exact point or the best point to enter the stock is here or here, not here. But there is one exception I do, and I also trade one pattern that helps me to participate in this big move, which is eventually going to go up. Okay, that structure is nothing but high tide flag pattern, or also called as power play pattern. Can you see this is the high tide flag? The name is because it resembles similar to a flag that is flying high and tight. A beautiful move, and there is a flag formation over here. This high tide flag was popularized by William O'Neill in his book How to Make Money in Stocks, and it is also discussed in detail by Mark Minervini in his book Trade Like a Stock Market Wizard, and he gives a different name for this. That name is power play pattern. He calls it as power play pattern because it gives you quick money with lesser risk, so he calls it as a power play pattern. So in this video I am going to give you the complete roadmap on what is high tide flag and how to identify the proper structure. I will also be discussing about entry, exit, where to keep the proper stop loss to make it as a low risk entry, and I will also be showing you the past trades where the high tide flag has given good returns, and current examples also I will give where the high tide flag has already broken out, and examples where the flag is forming, and examples where the flag may form in the future also. I will also talk about how to scan for those stocks, where to scan, and the most important thing, common mistakes traders or new beginners do when they trade the high tide flag, and how to avoid those mistakes. So first, what is a high tide flag? A high tide flag price pattern is a rare occurring in no more than a few stocks during a bull market. It begins with the stock moving generally 100 to 120% in a very short period of time, say 4 to 8 weeks, and then corrects sideways no more than 10 to 25%, usually in 3, 4 or 5 weeks. Can you see in the right side the example? This is a chart of BSE. The stock has moved from its low for around 133% in a very short period of time. After that, it went for a consolidation of 1, 2, 3, 4 weeks, and then again breakout, and again gave a return of 84.3%, and then it keeps on moving up. And in this zone of consolidation, the stock corrected less than 25%. That is the most important point, because when the stock corrects, it should not be more than 20 to 25%. That is the ideal range for the correction. This shows that the stock is very strong and has the potential to move further up. So first I will talk about how to scan for these stocks, right? Then I will show you the examples. The best method to scan for this stock is manual scanning. Manual scanning is the number one scanning method because it increases your win rate like anything. Believe me, if you scan the stocks manually, you will see the chart in a more different manner than when you scan those stocks ready-made. Okay, try this once and use scanners as an adjunct. Okay, the second method what I will show you now is the MarketSmith. MarketSmith India is a good platform where you can scan for those ready-made high tide flag pattern. It is good and accurate, and you can get ready-made stocks for this pattern, but the disadvantage is it is a paid version. But if you subscribe, you can use it free for first 10 days, and I am also going to show you in my free version only. I have not subscribed for that till, because I feel that manual scanning is my most favorite method, so I usually don't subscribe to this kind of platform unnecessarily. I will do that only if I feel that it is very necessary. And there is another method where you can scan the stocks for free, that is Trendyline. You can scan those stocks for free. Good stocks can be traced over here, but it gives a vague watch list only. You have to do some manual adjustments, and then you have to combine manual scanning also with trendy line. Okay, I will also show this also how to do. First, let us see how to scan stocks using MarketSmith. For that, you have to go to MarketSmith India. Once you go to MarketSmith India, what you can do is just go to this tools section and then click the idea list here. Okay, tools section and idea list. Once you click the idea list, you can see on the left side there will be a MarketSmith stock screens, and click on that and you will see on the third row potential high tide flag. When you click over this, you can see the stocks that has given a recent move of 100 to 120% in a very short period of 4 to 8 weeks, and then it has corrected no more than 10 to 25%, usually in 3, 4 or 5 weeks. Okay, so you can see the stocks over here, and these are the list of stocks that are showing such a move. You can see the stocks here that has come in the scan, and then you can export here. Okay, once you export these stocks here, what you can do is then take it into those names into the trading view and create a watch list, and you can go through those charts and you can see which stocks are applicable for trading immediately. An alternate way, as I already discussed, is I'll be showing that is trendy line, right? In trendy line, for trend line, what you have to do is just have to go to trendline.com. This is trendline.com. You can see here. Once the trendline.com opens up, you just have to click here markets, and then you can click top gainers. Okay, once the top gainers comes, you have to click quarter. Okay, what is quarter means? It means 3 months. Okay, 3 months data. 3 months is usually 12 weeks. 12 weeks is a good time, and in that trendy line, the most disadvantageous thing is it gives most of the stocks that it gives are circuit stocks. If you see Indosolar, it will be a circuit stock. It will Sumit Industries, it will be circuit stock, because these stocks are not tradable. So when you are searching it in trend line, you have to make sure that the stocks are having some quality. For that, what you have to do is you have to make sure that your stock universe is good. I usually select a stock universe of Nifty 250 microcap for this type of pattern. Why? Because this type of pattern is explosive pattern. Okay, you have to make sure that the stock you select, okay, the stock you select should move explosively within a shorter period of time. That is not possible in large caps or mid caps. So I selected the stock universe as microcap 250, and you can see in this microcap 250 as once you select this, you can see the quarter change. The quarter change is around 75% for Gabriel, 67 for Datamatics. And now don't think that, oh no, these stocks have not moved to 100 to 120% and worry about that, because in US markets, William O'Neill, they are based on US. In US market, each stock will give to around 30 to 40% moves in also one day. The gaps don't 30% in a day. So their stock markets work differently. But our Indian stock markets, due to participation is comparatively less, those kind of moves are not possible. All stocks can't move 120% in a quarter. Okay, even if it moves, a good quality stock won't move like that. Okay, only pump and dump stocks will move like that. So when you are looking in Nifty microcap 250, you are making sure that the stocks are acceptably liquid and the stocks are acceptably good enough to trade, right? So these stocks shows a tremendous move in 3 months. This is well enough. You can trade these stocks also. So you can see this. If you want to export this, you can export by paying around 100 or something for a month, the premium comes around 100 to 150 or something for a month, and you can export this table. This is a premium future. But alternatively, what you can see is you can see the name and then go to trading view and check those charts also. Now I had created a watch list based on these two scanners for you to understand. Okay, so we are going to go into those scanners. First I am going to show you the past winners. Okay, the past winner is this is a past performer. You can see the BSE here. The stock went up here around, from its low it went up around 210%. It then formed a slight high tight flag for 3 to 4 weeks, and then it rose again, and it gave a return of around, from this breakout it gave around 85%. Okay, from this again it formed a high tight flag and went up and again gave 26%, came down, and then it started moving up. Okay, so the difference between this high tide flag and this flag is this is the exact high tide flag what you should be looking for. That is, the move is coming, the breakout is coming within a period of 3 to 4 weeks, while here the breakout comes after a period of around 12 to 14 weeks, right? So this is stronger than this one. Okay, that is why once after the breakout the stock has come down here, and then it again gave a breakout there. This is the past performer. Now I am going to show you charts that has broken out recent time. Okay, kindly understand, the stocks I discuss are for educational purpose only. Don't trade based on my video, or it is not in recommendations. What I am discussing here is nothing but structures, not the stocks. I don't know anything about whether these stocks are good enough or not. I had seen those structure and I had condensed it into a watch list. Then you have to look into the company whether this stock is tradable for you, and then you have to make a conscious decision with proper position sizing and risk management. Hope that point is clear. So this is C2Z, and you can see the stock has moved from here to here around 158%. Then it went to take consolidation for 1, 2, 3, 4, 5, 6 weeks, and then gave a breakout. Now the stock has performed. So this is a second stock with the recent breakout, Krishi Wall, and you can see the stock in 8 bars at that mean 8 weeks it has run up, and then it consolidated for 9 weeks, and then it has given a breakout. These kind of structures are what is called as high tide flag, and these structures can give you a tremendous return in a very short period of time with lower risk, provided the market conditions are good. And this is another stock, Garuda. Can you see how beautifully the high tide flag is played out? Good move, consolidation, breaks out. And this is Stallion. Good move, consolidation, breakout. And now we are going to see those stocks that are awaiting breakouts. Okay, this is Datamatics. The stock has formed a fantastic run, and it is now in the consolidation zone. If it breaks above this level, you can look into the chart, look into the stock, and you can trade. And coming to the entry and exit, the entry is very simple. Once the stock breaks out this consolidation zone and closes above, you have to enter here. You can even go to daily time frame for better entry. This is weekly time frame chart. Go to daily time frame, and you should have entered in this day when the stock has gone here. Okay, and exit usually keep it down to the close of the candle, because this stock is a high moving stock, volatile stock, not volatile, but it is high performing stock. So if your stock selection is correct, the stock will start performing right from day one. That is what I had found. So you need not keep your stop loss to this pivot, or you need not keep the stop loss to this much deep. Okay, it will give you a loss. So when you are entering in high tide flag, your stop loss can be kept at the low of the day itself. This will give you tremendous risk, low risk entry, and it will also give you a perfect reward. if the trade works off. Okay, so that is what about entry and exit. And this is awaiting breakout charts, that is datamatics, and you can see the Lumax tick here. This is also awaiting a breakout. After a beautiful move, it is forming a high tide flag. The flag should be calculated from here because this is the point where it reached the peak, right? So now it is consolidating for 1 2 3 4 5 6 7 8. Not bad. If it breaks out in 1 or 2 weeks, then this can become a good candidate. And you can see the future candidates. These are future candidates. Keep them in watch list and look whether this chart can form high tide flags. Okay, whether if the chart forms a candle like this, candle like this, candle like this, and then it will form a high tide flag, then you can look in entry into these stocks. Right, so next is JBL, JUBL, CPL, and you can see the tremendous move. Look for whether the stock can form any flags here. Ixigo is another example. The stock starts consolidating. If it forms another 2 to 3 weeks of consolidation, this qualifies for a good high tide flag pattern or power play pattern. This is Cupid. The trend is weakening over here. It may form a 3 to 5 weeks of consolidation and then give a breakout. That also you can consider. Force motor is also forming the same beautiful move, and then but in force motor, can you see, you can see several high tide flags within this pattern. What I am saying is, this is a weekly chart. You can see a move here, 2 weeks of consolidation, breakout, a move here, 2 weeks of consolidation, breakout. Or even if you don't consider this as a high tide flag, can you see here a move here and then consolidation and breakout. Within this chart, can you see how many flags are formed? That is what I am talking about. These flags keep on forming as the stock is very strong. One thing to keep in mind is these are quick money, low risk entries. You should make money and then come out immediately, because the exact point to enter force motor is here. This is the point where you should have been entered, but you missed the trade. Now the stock is moving up and up. You feel that the stock is very strong, so you have to enter somewhere. You want to enter somewhere. That is where you should use this high tide flag pattern, because it gives you a proper stop loss point. Here, this is the stop loss point, right, or the low of the candle. This is the stop loss point. That is why this pattern is very useful. And you can see how beautiful this stock is consolidating. GPECO. The stock has moved beautifully, and now it is forming a consolidation zone. So when this stock breaks out, you can keep the stop loss at the low of the candle that breaking out, and then you can trail your stop loss or exit at a certain level when this gives a good move. This is again forming a good pattern, but there is no flag here. It may form a flag in coming days. Now the most important part, any pattern or any structure won't work all the time. The common mistakes that you should avoid while trading high tide flag pattern is be selective. So by be selective, what I mean is, you can see n number of stocks that are showing high tide flags, but you should be selective which stocks has the higher probability to win. For example, you can see the C2C chart here and Krishi Wall chart here. Okay, don't consider this as a recommendation. These are just structures I am discussing. I am not discussing anything about the stocks. There is no buy or sell recommendation from my side, because I am not SEBI registered. So these two stocks, when you compare, in this stock the breakout is happening below the all-time high. Here it's the all-time high. The breakout is happening here, right? While here the stock has already broken out the all-time high, and in that all-time high zone it is forming a flag and it breaks out later. So in my view, this stock is more powerful than this stock, because once the stock reaches here, it may face a resistance and slowdown may happen in this stock, while this stock can keep continuing its outperformance. That is why I am saying be selective. Second is fix your target realistically. By realistically, what I mean is, see, the stock is already giving 100-200% return in a very short period of time. When you are entering into the high tide flag pattern, you should make sure that your target is around 30-40% or 20-30%. That is the average range I will recommend, because once the stock reaches 20-30%, then you should be more careful, because you should not lose your profits, right? Most of the time, can you see in this example, here the high tide flag broke out and it gave a good return, while here after the stock broke out, it didn't give that much return. It started correcting, right? It gave 26% return and then started correcting. So it is always better to at least make a partial profit here. You can book 50% over here when the stock makes 20-30%, and then you can trail the rest. So fix your target realistically. Avoid preempting the trade. You should enter only after the breakout. Don't enter here. Don't enter here seeing the big candles. Don't enter here when you see a big candle imagining that the stock is going to break out. It will test your patience to a lot. This is a weekly chart. Imagine if you had entered the trade here, you should have waited 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks is almost 2 months before the stock broke out. 2 months of waiting without zero returns, even negative returns at some point, will hamper your psychology a lot. In high tide flag, you should expect the trade works out immediately once you enter. Situational awareness is very important, because this high tide flag works only in the raging bull market. It doesn't work in bear market, or when the stock market is in sideways move, or when there is no clear indication of trend in broader market structure. So make sure that your broader market and your portfolio performance, for example, in your portfolio, if most of your stocks are underperforming or giving negative returns, then that is never a time to trade high tide flag. You will see your portfolio booming with profits. You will see your portfolio increasing day by day, 1%, 2%. Your portfolio, not your individual stock. What I say is your equity portfolio will increase 1 to 2% every day. Okay, that is the time you should understand that we are in a raging bull market. At this time, this stocks works wonders. Okay, also don't trade when the broader market trend has matured extensively, then this may again fail. So keep these things in mind when you trade those high tide flag. And thank you guys, that's it for today, and in next video I will be discussing some other useful topics. If you want to ask me any doubts or clarifications, you can do that in comment section. Subscribe to my YouTube channel, and if you like my videos, you can share it with your friends also. Hope this video would have given you a clarity on how to trade this bullish continuation pattern. Thank you.